there's important data that is going to be coming up, not only the Fed meetings where there's going to be interest rate hikes most likely, but also the information before and after those that will dictate any future policy changes. And one of those important events is CPI data. Now this comes out every month and it's going to come out on Tuesday, September 13th. So I want to take a close look at the SPY right now. That's the S&P 500 ETF because it's at key levels heading into this key data. Now, before we look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. All right, here we have the monthly chart of the S&P 500 SPY ETF. Now, if you're new here, I'm Hema Reddy, and my baby is the E-mini S&P 500 futures, so another S&P derivative. But we happen to be in the midst of a contract roll, shifting from the September contract to the December contract. So this is a great time to look at the SPY and get an overall feel for how the S&P markets are moving. So I'm starting with the monthly chart here, as you can see, and these horizontal lines in blue represent potential resistance levels, and the pink line here represents potential support level. Now this support level, an area of buying power, was already hit so far here in September at 392.04, and we came down to 388.42. So in a monthly time frame, that's just a 4-point difference. That's a really narrow margin for that support to have held and been useful. Notice also that we continue to lift out of the bull support power zone on my favorite indicator here, the RSI power zones. All of this with the recovery off of the low from June still intact. All right, so what I'm going to do is I'm going to just take this chart right here that you see. I'm going to shift it down to a weekly time frame. Now it'll take a second for the data to load, and then I'm going to manipulate my chart to get it all into the window as I'd like to see it. So you can see that the move off of the January 2022 highs, it recouped some of the move that we had off the pandemic low, stabilized, and there was a great setup here between momentum and price that was an early indication that things might turn higher. Now, still with my monthly chart resistance and support levels there, I'm going to add in some new weekly ones. So right off the bat, I'm seeing a key range that's defined between these two levels, 421.22 and 431.73. Now, the definitions and the specifics of all of these levels are going to be in my free tribe portal that my members have access to. So when you join my tribe, then you can head over to the tribe portal, go to the skinny dip page, and you will see these levels. All right, on the downside, we have this low here. So I'm going to change it to my pink because the colors help me quickly know where I'm at in the market and support and resistance. And I'm also going to show you another important level. I'll be back in a second. Okay, here's that other important level, 397.97. And that applies my Gann candlesticks techniques. All right, so with the latest run up off of the last week bar, which was an outside bar, that's an important type of bar and candle pattern, things are looking good for the SPY. Now, I did mention that we're coming to this CPI data, and that's not necessarily going to dictate whether we rally or fall. It's a piece of the information the Fed is likely to consider in its long-term rate path. But I do want you to be aware that data like that's coming out, and it may prove to have volatile market moves around that time. So you can check any economic calendar out there to see when these reports come out and more. I'll have some useful links for members of my tribe inside the Skinny Dip portal with this video. All right, so from here, the key juncture that we are at is that this market has retraced over 50% of the move down from the August high. And it's hovering right at that level. So now I want to go to a daily chart and see what other evidence might suggest whether we're going to trade higher from here or lower. So again, I'm going to take this time frame and just shift it right in front of your eyes and go to a daily chart. All right, so here we are fully adjusted on the daily chart. Now, on this daily chart, I'm seeing a couple more levels that I'm going to add in. All right, so I just added in a couple more levels. You can see 412.61 as well as 419.96. That's very close to the 421.22 I pointed out earlier. So if we get through 412.61, then there's a decent barrier of resistance here in this 419 to 421 area, which is very narrow. And notice that if that occurs with the RSI power zones returning to the bear resistance power zone, that could be a pivotal area for the SPY to potentially significantly pause or even turn lower. But I'm not in the business of trying to pick tops and pick bottoms in the market. That's not what produces profits in a trading business. It's being able to identify potential opportunities and then taking action on the evidence that actually unfolds in the market, okay? So you trade on what actually is happening on the charts, not what you think is going to happen. You just have a plan and let the evidence unfold to show you. Now, whether we trade higher from current levels and pause at those resistance that I noted, or we just turn lower from where we're at, there are support levels down below that would need to be taken out, traded beneath for the market to resume lower. And the most recent and important is at 402.46. Now you might say, well, why not just today's low at 408.46? Well, that comes back to an important concept that is in my GAN courses, that's even in my GAN book, about the relationships between the past 1 and 2 and 3 days and what are the most significant levels to look at for trend change. So there you have it, a clear path of where we are headed with these resistance levels above, a look at where we might fall below and what supports are there in the way. And so whether the news creates a volatile move or not, you're going to see the resulting trade action play out on the charts, and you can still follow your trading plan, your risk reward, follow trading per your account size and more to be able to capitalize on it. Now notice one more thing that I've added on the charts here that I want you to monitor, and it's these trend lines. Okay, trend lines are basically dynamic areas of support and resistance. They change as time passes because of their tilt. So traditional trend lines can connect two lows and be confirmed on a third touch, as you see here from the early September action, or they can connect two highs and then be confirmed as they were back in late August. So we've just broken above the falling trend line of the two noted here. So see how those coincide with the support and resistance levels depending on when the market trades there. And remember, CPI is coming out September 13th, but the next FOMC meeting, where there's likely to be a rate hike as of this juncture, 75 basis points, is on September 21st, highlighted out here in yellow. So you can use all of this to navigate your trading using price, time, and momentum. So if you're not part of my tribe, please join, where there's so much more information like this that you can learn from. And remember to subscribe, like, comment down below, and follow, and I'll catch you on the inside. You can sign up with the link to join my tribe and get my hot, timely, actionable updates as soon as I publish right to your inbox.